In a past video, I have mentioned that technical analysis is one of the ways that you can use to predict price movement in the forex market. So in this video, I'm going to expound more on the topic and hopefully give you a bit of direction as you continue in your forex trading journey. Hi, my name is Winnie and I make forex trading related videos, especially suited for beginners. If you're new here and you're into this kind of content, kindly consider subscribing and hit that bell icon to get notified every time I drop a new video. So without further ado, let's get started. First things first, Happy New Year to all of you. I'm so happy to be back. So to start off the year, we are going to have another one of the whiteboard sessions. So just jog our memories. Technical analysis is the study of past price movements and patterns in order to predict future price direction. So that being said, you can use three tools to conduct technical analysis. You can use patterns, you can use candlesticks, or you can use indicators. Personally, I have used and currently use patterns and candlesticks, so these are really the only ones that I can talk about. But in this video, we are going to explore more about candlesticks. If you've ever come across a forex chart, then you may have seen this. So this is what's called a candlestick chart. So what exactly is a candlestick? If you've guessed that it has something to do with candles, then you're absolutely correct. So a candlestick is a representation of price movement, and it typically takes the shape of a candle where we have the body and we have the wick. So in forex, the body and wicks provide information about buyers and sellers. So as it starts out, a candlestick starts out as a single line on the chart. So this becomes the opening price. So like I said earlier, the definition of a candlestick is that it's a representation of price movement. Now, in most cases, this opening price does not remain the same. So as buyers and sellers come in, this opening price is going to change depending on which side is strong or which side overcomes the other. So I'll demonstrate this with an example of a pair like pound dollar. So let's say the opening price was 1.3700. Now the buyers come in with all their aggression, pushing price all the way up to around 1.3800. But they are unable to maintain this price because the sellers come in and push price all the way down to around 1.3650. Again, like the buyers, the sellers are unable to maintain this price. So the buyers come in, push price all the way up, back up to around 1.3750. So let's see how a candlestick will represent this information. So it has started out as 1.3700 and it goes up at 1.3800. So this becomes the highest price that the buyers are able to take this pair to. Now price goes down all the way to around 1.3650. So this becomes the lowest price that the sellers managed to take price to. And since the buyers come in the market and they take price to around 1.3750, so this becomes the closing price of this candlestick. Since the closing price was higher than the opening price, so this means that the buyers won this round. But let's take an example where the closing price was actually lower than the opening price. So instead of 1.3700, let's say the candle closed at around 1.3650, then this would have meant that the sellers outdid the buyers. But thankfully, there's an easier way of finding out which side outdid the other, and that is by looking at the color of the candlestick. A majority of charts use color green to represent the buyers and red to represent sellers. But you can easily customize the chart to your own liking. Let's say you prefer the color blue to represent the buyers and yellow to represent sellers. That is entirely up to you. Now, another important consideration you need to make when it comes to candlesticks is their size. So a large candlestick basically means that there is pressure from either of those sides. So let's say you spot a large green candle, and compared to the previous candle, it was just a small red candle. What this means is that there is increased or high bullish pressure compared to this low pressure here from the sellers, and it could actually be an indication of a possible change in price direction. But don't worry about this, I'm going to make more videos on how you can predict price direction. If you've made it this far into the video, I truly appreciate you. In the comments below, you can also let me know the type of content you'd also like to watch. Remember to leave a like, share and subscribe to the channel if you haven't already, and I'll see you guys in the next one.